Hello everyone, so I'm going to be talking about a lot during this video. We're going to be taking a look at the relationship between what I think is the relationship between Bitcoin and GameStop, and of course the rest of the market. So we're going to take a look at the S&P, the NASDAQ, the Russell, all the large tech stocks, the VIX, the dollar, and the bonds. All right, so without further ado, let's get started with the video. All right, so what I've always seen is the move in Bitcoin always precedes GameStop. So Bitcoin would be making new highs or it would be skyrocketing upwards. And then GameStop ends up following a few weeks later. So what I did was I put a chart of Bitcoin. Bitcoin is this red line. And let me just clean this up. All right, so it looks cleaner. Okay, so this red line is Bitcoin. And of course, the regular chart is GameStop. So the original run-up that we had with Bitcoin and everything that happened, we ended up seeing a bounce in GameStop. Basically, this was actually 3 weeks after the peak on Bitcoin. We ended up seeing a big move in GameStop 3 weeks after. I'm not saying it's going to happen 3 weeks after, but that is something to take into consideration. Then the next time, it was a bit more correlated when in August of 2021 when we were rising, and then when we were also rising November of 2021. But I would argue that those were more of just the Bitcoin was like topping out, so it wasn't a great bullish structure, and the overall market was getting pounded. This was back in January when Jackson Hole was also happening, so this was not like an amazing opportunity. Okay, so now what's interesting is if you look at it again earlier this year when GameStop really bounced to the moon back in May, when we made a lot of money, like a lot of people just became rich. 3,500, 4,000, 6,000% gains on the contracts. So Bitcoin was making new highs, and it was showing a lot of strength. And then what did GameStop do? Once again, a few weeks later, it started making highs. So we're sort of at that point again. Bitcoin made highs. It's starting to pull back a bit. In a few weeks, like I was saying, my original prediction was GameStop was going to get a very big pump in January. So let's see if that's correct. But so far, correlating to the highs with Bitcoin and GameStop at the same time, it does tend to bounce. GameStop does tend to bounce a few weeks after Bitcoin tends to make highs. So we'll continue monitoring this. This is like some fun little thing that we can monitor over the next few weeks, hopefully. But that's my analysis on that. And also, like, I have just been very, very bullish on GameStop. I'm telling you guys, like, I am actually getting not only the trades that I already alerted. We're in June. We were in January 2025 calls. I sold those because those were up too much. We're in June 2025 calls, January 2026 calls, and January 2027 calls. I think GameStop is going to end up giving a better percentage return than any crypto can, unless you're trading leverage. But I think this is a really good opportunity. And definitely the longer term contracts on GameStop are gonna, they're way more safer, So I like it, to be honest. I'm not your financial advisor. It's not financial advice. But that's that for GameStop. Let's see if in the next few weeks we get a big pump based off of what we see already with the history between Bitcoin and GameStop. I'm actually interested to understand why no one has ever made this correlation. I've never seen this correlation on Reddit or any other social media. So maybe someone could watch this and copy and then just make it, I don't know, famous or something like that. But yeah, it is what it is. GameStop, regardless of whether Bitcoin was doing this well or not, I was expecting a big, nice pump for GameStop into 2025 January. And the last but not least, the other last thing that I want to share with you guys is the 50 exponential moving average, which is this blue line, closed above and it's crossed above the 200 exponential moving average, which is this green line. So what I want to show you guys is the last 2 times in history what ended up happening to GameStop's price. So in in April of 2013, we got that cross above, and you could see GameStop's price ended up going from around 750, and then the weeks afterward for it ended up going to around like 100% gain on the stock itself to 1350. And then, you know, obviously the most recent important date was this the week where we made new all-time highs on GameStop. That was the last time that the 50 crossed above the 200. So obviously we know what happened afterward. But then just recently, we just recently crossed above again. So definitely not a completely bearish sign. So yeah, it's gonna be interesting to see what ends up happening. I am more bullish into the end of January though. Whatever happens for the next few weeks is sort of irrelevant, but it's interesting nonetheless. All right, so number one, daily chart of the ES, S&P 500. I just want to show you guys the advanced decline indicator real quick. What we see is this advanced decline indicator is sharply green, okay? Generally, when we have been in the green on the advanced decline, it's not bullish. It means that there's going to be a pullback sooner. There's weakness. So you can see it's not perfect, but for the past year, it's been doing pretty well. You could see some green here and get a pullback. Green here, you get a pullback. Green here, consolidation, made new lows, but it wasn't like a giant pullback. And then we had some green here, and then it was a pullback. Then green here again at the highs, and then pullback. So now we're green again, and we are sharply rising to back in July 2024 levels. We're gonna have to monitor what ends up happening with this, but so far technically, let's just zoom in here. There's a lot of different moving pieces going on in the market. For me to just blatantly say, hey guys, this is super bearish or this is super bullish, anyone that says that is, you know what I want to say. But a lot can still happen. Even if the market is going to move down, it can still move up in the short term. Or even if the market wants to move down, it can still move up in the short term. So here's what we know. Okay? So first and foremost, this is what we know. Why? One second. Okay. I don't know where this green trend line is from, but delete it. Anyway, what we know for sure is we have 2 solid closes above a major level, a major trend line. Okay. So once again, we were monitoring this trend line since August of 2024. We connected it to the lows of September 11th. You could see that it's been acting as support and resistance here. And once we got a break above, you know, then remember this entire last week, it was acting as straight resistance. Okay. Now, so far, we got 2 solid closes above it. That in and of itself, regardless of how bearish this setup looks, regardless of how bearish the NASDAQ setup looks, regardless of how bearish the IWM setup looks, we got 2 major closes above an uptrend line. So that really cannot be ignored. Just this in and of itself gives the ability for the market to make a new high in the overall market this week. So I'm not saying that's what's going to end up happening, but you know, the numbers are there, and technically we got 2 closes above a major trend line resistance. So that's what we want to see. Usually when there are 2 closes, it means that the market wants to continue pushing up in that direction. Whether we do or not, it is what it is. It's yet to be seen, but that's what we have so far. Do I think these setups are bearish? Do I think these setups are bullish? I don't know. We ended up going long into some swings. We got some swings at around 540, 596. Those ended up doing well. And currently the SPY closed at 597.50. Let's see where we open. But I'm not entirely bullish or bearish or anything like that. But you can't ignore what we're seeing. You also cannot ignore the bearishness in certain tech stocks. So what we need to look at is these tech stocks. So number one, man, NVIDIA. NVIDIA, clearly, is this bullish? It's not bullish. NVIDIA bearish like this is not good for the overall market. Netflix also pulling back like this. Huge winner. Where is the money in stocks like Netflix, NVIDIA going to go? So now let's just go down the list and look at the rest of the tech stocks. So Google got a bit of a bounce. Obviously, it was super weak. I didn't like going long, but we ended up bouncing $3. Google actually outperformed. Microsoft also is closing above a major downtrend line. So this is a Microsoft doing this. This is probably, if it can remain above this trend line, this is one of the most bullish things in the market at the moment. Because this, I'm not saying that I would just love going long here, but a situation like this, where a beaten down loser is starting to creep up above a trend line the way that it is, it gives a lot more opportunity for a big bounce to the upside. So let's see if money starts flowing into Microsoft soon. Amazon is similar looking to Google, not an entirely great chart. And then we also need to look at Tesla. So Tesla's not too bullish either. So Tesla, Netflix, NVIDIA, they're taking a dump. And then Apple did pretty well. So Apple is doing pretty well. This is sort of the situation. This setup on Apple is essentially the setup that I want to end up seeing happen on Microsoft. So downtrend, reclaimed it, retested it. So you can see reclaimed it, retested it, maybe closed below it, and then started to make its way up. So I want to see if Microsoft can do the same. So there's that so far for the large tech stocks. They're giving mixed signals. Clearly, when you look at the chart of the NASDAQ, or if you even want to look at the chart of the QQQ, this is not a completely bullish setup. Clearly, you can see this. But then even on the NASDAQ as well, we have reclaimed a major trend line as well. So that, we got multiple closes above this trend line. This is the third close above. And prior, on November 22nd, 21st, and 22nd, we got two closes above, and then we ended up skyrocketing up. So, once again, regardless of how bearish things may look, we are closing and reclaiming above a major uptrend level. And just to really show you guys and clean this chart up with you guys here, this trend line basically began back in late 2023. So this was the trend line that we saw. You could see that it was acting as support, and essentially all throughout April, this was acting as a major resistance level. As soon as we broke below it, it started to vomit. Once we held above it, this was a major level of support. You could see it retested here, bounced back up, and then choppy again once we got here again. Once we reclaimed it, bounced. So you could see, like, it really, this trend line really, really matters to the NASDAQ. And basically, it's a similar situation to the ES. But at the moment, we are firmly closed above it, regardless of how bearish things look. So that's another issue. So this trend line for tomorrow is at 504.80. So if we close below 504.80 on the NASDAQ, and we end up closing at like 503, then the trend line is we've closed below the trend line, and then we could essentially the momentum to the market is going to most likely be a bit more bearish. But let's see. Let's just monitor it day by day. But so far what we see is the NASDAQ and the ES are both above trend line levels of trend line uptrend levels of support. Does this look bullish? Not really, but we gapped up. It's tough to like. This is the problem. We have large tech stocks showing a lot of weakness. NVIDIA, Netflix, Tesla vomiting. But then we see the main factors of the market still bullish. The indices are still bullish. The IWM, it doesn't look like a green. This doesn't look like a bullish setup. But we just blasted through highs, and the IWM is still up 1.5%. So that's sort of the problem that we have right now in the market. When we're looking at the VIX is still, we were looking at the VIX last night. Of course, the VIX is going to have a bit of a red day because the market was green. And it's important to look at the VIX because the VIX has a very clean inverted relationship to the market. If the VIX is red, the overall market is green. And currently, it's still holding above 13, 14 support. And we have to see if it continues to hold that level of support. Once we get down here to these levels on the VIX, it is much more difficult to be bullish on the market because the VIX rarely doesn't stay below this level for long. And you can see that how it consolidates basically right below this major level of support. If you just essentially lean long, if you essentially lean short on the market for a few months out based off of just the VIX, we'll see how that plays out. But so that's that for the VIX. The yields also got a bit of a pullback as well. So the VIX, so the yields are starting to pull back. The bonds are obviously bouncing heavily. So the bonds are important to look at because they have a more correlated relationship to the market. If the bonds are doing well, the overall market should also be doing well. We're finally getting a solid, strong move out of the bonds from these lows here. And we haven't really seen much of a correlation to the bonds, the yields, or the dollar. The yields rising, guys, when the yields rise, like this for the past few weeks, that is very bearish generally for equities, but we've just seen equities fly. So the correlation for everything needs to basically even itself out, and we're going to see if it continues. But the dollar is pulling back. A bearish dollar, when the dollar falls, it's bullish for the market. Technically, that's what ended up happening today. And we're going to have to see what ends up happening overall for the market. Our XOP calls ended up doing pretty well. Those were up again 20%. So honestly, like the only real major thing that we're going to have to look at are these trend lines and whether or not we can make new highs. But then once again, the other important thing that we could take a look at is the MACD indicator on the ES, the NASDAQ, and the IWM. It's starting to curl upwards. So the slower acting MACD line on the all three indices is starting to show some bullishness. How much bullishness, guys? This is not like, I'm not like ecstatic, but it's starting to show some sort of curl upwards. And generally, when that happens, it is technically bullish, but again, the advanced decline green line here is starting to skyrocket upwards, but the slow MACD line is starting to curl upwards. The NASDAQ still hasn't crossed above yet. So maybe once the strength in the SP500 and the Russell can continue, then it'll help lift the NASDAQ up. But so far, you can see that the MACD on the Russell and the ES looks much better. We crossed above, and the slow MACD line is starting to already move upwards. The ES crossed above, and it's starting to really kind of cross upwards. But on the NASDAQ, it has not crossed above yet. And it still has more. It has the most upside potential currently, but it's tough. It's tough. Would I want to aggressively go long here? Absolutely not. Would I want to aggressively go short here? Also, absolutely not. So we're in limbo. We're in limbo, guys. We are in limbo in the market. The only thing really is, once again, we just have to monitor it. Fun fact, I started putting butter in my coffee, and it gives me a lot of like sustained energy. I think it might be the fats in the butter and the slow release time. Who knows? But it's really nice. But yeah, honestly, that's that. The trend lines, the MACD indicator. I hope you guys enjoyed today's video. We looked at a bunch of different things. With that being said, man, I hope you guys enjoy. I hope you guys are enjoying my live streaming and my voice chat. Not my streaming, my voice chat. I describe in detail basically what's going on in the market. I enter and exit all of my trades. Hopefully you guys are enjoying that. But yeah, you know, with that being said, hope you guys have a good rest of your night. And I'll see you guys tomorrow. All right, have a good one. Take care.